Ladies and gentlemen, boys and girls, kings, queens, and everything in between, today we had a pretty good day. If you could just imagine for a second how good today was. 50% up on the day. 52.86 is going to be the new tattoo on everyone's sleeve. GME, wow. Just wow. It is still continuing to rip after hours, but you probably are wondering exactly what happened. And oh, hey, where's that cup and handle? Where is that squeeze? I'm going to answer all these questions and more. Remember, if you wanted 2 free stocks, in the description down below is that Webull link to be able to get the same technical setup that I have here. It's looking at AMC on my left, GME on right above me, and the price and all the financial metrics that you want to take care of. That is something for you to look down in the description, as well as hitting that subscribe and like button will really help out the stream, and onward we go. What we're looking at here on the left is Wynn Resorts. It's a 2002 cup and handle. So this is actual historical data from a real cup and handle. What we'll notice here is double testing of one resistance among a long period of time. This cup and handle took months, if not years, to form. The reason why psychologically this works is because 2 of the same populations of people thought that the price of the stock was worth more than a certain threshold. It looks like right here, slightly underneath $180. What we notice here is just major dips right before we saw a major rip. So these 2 dips look very similar. Right now I have the daily chart for GME right above me, right here, and we see that the January gamma squeeze is that perfect left lip right there at around 472. The right lip of that cup is a little bit lower at 350. So Duck Gang, Space Apes, Moon Gang, and Moon Platoon. What does that tell us? Well, it tells us that this is the bottom of a beautiful U. The longer and deeper the bottom of the U can be, the better it will be for the rip later. And what else can we see here? 1 major red candle, 2 major red candles, looks very similar to these major dips in the chart in 2002, right? And as we speak, the handle has already dipped far lower than halfway up on the lip, so that gave us a moment to pause and worry. However, now we are well above that 50% part of that cup and handle. Right now we're at 180. If we take the right side of the lip and look at 350, that is looking good for us. So that's on the macro scale. That cup and handle pattern is still in effect with decreasing volume all the way until today, where we had almost 50 million volume. Now, Diamond Dallas page says, my wife tried to get me to sell after being down 50% this morning on 20K. Told her my sell button was broken, and here you are. If you guys have a similar story like that, drop it in the comments or in the live chat, because we want to hear exactly how tempted you were to sell on the dips. Do we ever have a song that says sell on the dips? I don't think so. We also have these option chains here that tells us a little bit more information about our gamma ramps. This is just a snowball slide, a frozen slide essentially, of how much snow there is on the ground, how many contracts there exist on the left and the right side of a current price. And that's given by the certain amount of volume per contract and each strike price that you would put a contract at. If that doesn't make sense, if it goes over your head, for now just understand that that allows us to have additional pressure as we roll past certain strike prices. Let's turn GME back into the minute by minute chart so that we can focus on this analysis once more. I drew some channels earlier this morning when we had a 9-part impulse wave. If you guys ascribe to the Elliott wave theory, that is one of the opportunities for us to be able to track how much growth we should expect and how many impulses we should see. After this impulse wave of a breakout from 120 all the way up to 180. That was nearly a 50% rise right by itself. It consolidated and started trading sideways at between 2 major support and resistance levels. This is really important to be able to note that it was right between 155 and 168. This was the testing grounds for GME many times in the past, and as it bounces between these 2 very tightly compacted resistance and support levels, we knew that it was in a holding pattern. We saw that this dipped between these levels for a minute and almost approached the VWAP here, the volumetric weighted average price, but it didn't get close enough after rising up here. Now you guys will remember that the prediction for this price movement was a rip upwards of 190 because of what we can see from this rip from 120 all the way up to 154. If we started to lose momentum, we could easily see another impulse all the way up from this bouncing between 160 all the way up to 190. We were just shy of 190 at the end of the day, so right now, it seems like GameStop is positioned itself for a major rip later on. Now, whether that's going to happen after hours pre-market or if there's going to be following a paper-handed dip in the morning for tomorrow remains to be seen. But do remind yourself that the options chain that we're seeing here has a major gamma ramp on the way up to $200. So what we saw here was 175. There's 3 million calls in the money right there, and it's all of the snow on the ground that we traversed earlier was all added one after another. We started adding 2 million when we crossed 130 from the morning. We had another million when we crossed 140. We added another 500,000 when we got to 145, and then a full 3 million when we got to 150, and then another full million when we got to 160. Onwards and onwards, roughly $5.5 million worth of call options are now in the money, which allows us to have a major buffer if they try to slide the price of the stock back. How? Well, let's just say that the person over here that has not exercised their calls yet, when they see a slide of GameStop coming down, they'll exercise their ability to buy that stock at $140. So we saw that they have hedged the institutions and the market makers have likely already hedged all of these prices on the way up to 180, which is that snowball effect. Delta hedging allows us to gamma squeeze. That is that slow rising effect here that becomes more explosive on Fridays. Hey, tomorrow is Friday, so that's one of the things that you should pay a close attention to. One of the other things is that we like to pay attention to the MACD, and on the minute chart, the MACD was screaming to be bought right here when the price of the stock was bouncing between these two. Like I said, one of the first things that you want to pay attention to is when this is bouncing, does the MACD start to deviate greatly from the signal line? Right here, you would have bought, but you likely would have, if you're scalping, sold again if you saw that the MACD line went back and reintegrated with the signal line. However, here it's a different story. When we see the price of the stock start to rocket, the MACD line stays a healthy margin away. That orange line stays healthily away from that signal line, which allows us to make a good prediction of how long to ride the rocket, which is all the way up, sir, all the way up. And when we started bouncing right here, one of the things that the MACD line started to obfuscate is whether or not we had another channel upward. That is one of the major line drawings that I had here. The beginning morning channel here had a trajectory upwards of $200 by end of day. However, the second more modest and conservative channel that I drew later had it going up to 190, and it had a near miss at 183.75. AMC, on the other hand, had a day, and I'm going to pull up the options chain here, had a day of just struggling at between $9 to $10. You see that there were a major call wall here trying to get the AMC to roll straight past $10. And when did that happen? Happened roughly around the beginning of the day, right around here. However, it did struggle between $9 and $9.50 for a long time. Now, this is a very similar tandem impulse wave that we see. They are trading in tandem for the most part until it met an 11.25 barrier up here. We see that on the $11 mark, there were $1 million worth of call options here to support that impulse, and unfortunately, that was something that had an AMC bouncing between two levels here because there was a significant amount of puts as well, almost $1 million worth of puts, but double to triple the amount of calls. One more of the important pieces of this puzzle is whether or not AMC had the momentum behind it. We noticed down here in the OBV that it actually increases a significant amount when we saw this natural growth here. This does not get reflected when let me pull this down a little bit. You see the gray line is the OBV. This does not get reflected when the price is manipulated and attacked as in previous times. So one of the best things to note is whether or not this is going to be natural growth or just a pump is whether or not the OBV is actually going to reflect the growth here. And the major things about the MACD line is that it also gave us insight into when to buy into AMC here at around 15, 13, 19, about 3:20 EST. AMC saw a major surge right as the MACD line crossed over the signal line. So that's something to pay close attention to if you want to be able to catch the bullish momentum of AMC pushing past the 1112, which it now is hovering around after hours. Both AMC and GME are looking fairly positive for the for what could happen tomorrow. One of the first things that you should expect is another paper-handed sell-off if AMC and GME continue to rise after hours. I imagine that the possible ceiling for the rise after hours is going to be up to 190 or 200, and for GME and for AMC upwards of $13. So if AMC does start to rise here at 12, there is no put wall here that could prevent it from rising any higher. However, we have seen crazier things happen. So one of the more important pieces to note is that AMC just rose 2% to $11.15. If it continues to catch a after hours impulse, it is likely going to be caught somewhere between the $11.50 and the $12 calls that we have here. Snow on the ground is good. However, one of the most important things to remember is that a good amount of these contracts are going to expire tomorrow, and more so, that is why a gamma squeeze is much more likely on Fridays. Hopefully that gave you a pretty good understanding of where we stand for AMC and GME tomorrow, and happy hunting. Those of you who bought the dip, big thumbs up from Poppy. If you guys like this video, go ahead and throw your meatball a treat. We have a, let me get rid of this. Okay, let's just go straight here. We got a PO box now in the description. Go ahead and check out these people. Thank you so much for supporting the show. Moon Platoon, Meatball the Space Legend tiers, and the Gorillionaire tiers. They all make the show possible. And if you guys wanted to join them, press that join button next to the subscribe button or the Patreon description in the link below. Thank you guys, and we'll see you guys in the money.